risk management is like the last thing most people look at. I
Because
know
it's
that most
boring.
mine. Yeah, it's boring. It's like, who cares? I just want to make money. That which is a total immature mindset coming into the market. That's why you lose so much.
Tonight, we're continuing. It is February 8th. Man, 8 days of February down the drain already. My goodness. Time is going. But tonight, we're going to be talking about continuing our cryptocurrency theme for the month. And last week, we covered the basics. We covered the history of crypto, how the term has been around, how I think people were using for encrypted messages, right? Encrypted messages. And another random fact about the crypto space or what. So I think where we're covering it, we're saying that the money or transactions or crypto coin, it's encrypted, right? On the blockchain, right?
Right.
Yeah, and so what makes it secure is that we don't have technology to somewhat hack it right now, I think. And then there's a talk of like quantum computers coming out, and so they're saying in given a few years, if we progress in the quantum computer realm, we'll be able to crack the or decrypt the Bitcoin or cryptocurrency um, stuff. And I'm like, whoa, that's interesting, dude.
So
I don't know how
essentially, is
that
it a
works.
hack on the whole
The whole
blockchain?
system. Yeah.
Wow.
Yeah. So that's
I'm sure it's
another.
possible theoretically.
Yeah. Yeah. So going back off the history of Bitcoin, we just talked about where it came from, what's out there. We're gonna be equipping you guys with cool, good content tonight and the rest of the month, and hopefully on this journey of even opening up a crypto wallet, storage wallet that we can access off and on the grid. But tonight we want to be talking about the the aspect of risk management with cryptocurrency, you know, and we're drilling into that topic because it's so key. A lot of people, when they're first investing or when they're first looking into what coin to buy, they just quick, yo. But I know, because my sister did this. She got some money on the side. She downloaded the first app that pops up on the Apple Store, right? What is it, Crypto.com or Webull,
Coinbase.
Coinbase? Not knowing, they just download it like a game and deposit money right away, dude, right away. And they got that list of crypto coins you can buy that the exchange offers, and they just go to town, right? Oh, you know what, 500 here, 500 there. You know what, my friends were talking about this 1,000 here, right? Does that sound accurate, bruh? Have
Oh
you
yeah, absolutely. Yep, definitely.
So that right there is why we're gonna be talking about what we're gonna be talking about, right?
Yeah.
You might get
People are
lucky.
yeah, buying coins that like you don't even know like the whole history behind and like what it's actually doing. They just buy it because they've heard it on the news or heard it through social media.
Or their friend
Yeah, or
or
their friend.
coworker that never
And
talks
that's
about
where it could
this.
get dangerous because I mean investing is fine. It's just to a certain you gotta break it down into percentages.
And realize what's important and what us as investors have to do it the right way and to do it continuously and to eventually grow the money, and be able to live a lifestyle that we want, right? Or you can give it to charity. So by people taking that action of downloading the app real quick, throwing money in there, and just buying random things and hoping for the best, that is not the right way to do it. Yes, I get people will get lucky. Just like you just go to Vegas, right? You find the slot machine, put the coin in, you get lucky, right?
Gambling. Gambler's mentality.
Gambler's mentality. So, with that being said, let me go jump into my share screen. So, biggest question, right? A lot of people ask is, dude, what do I invest in? I got X amount of money. Uncle Sam just paid me. My mama just gave me allowance. You know, I just sold my house, my whatever. I sold my Pokemon cards. I got money, dude. What do I put it in? What do I buy? What do I buy? Right? So what do you invest in? How do you allocate enough? Right? How much do I allocate in cryptocurrency? Like, do I pour all of my life savings in it? Do I sell a kidney and go put it all in crypto? So those are questions a lot of people ask, you know, along with the which crypto to buy. Dude, there's over 17,000 and growing, right, Reed?
17,422 right now.
Look at that, to the T.
Jeez.
17,000. That's the question. What do you buy? Right?
How many of them are actually legit?
So those questions I hope we can help solve tonight over the next 50 minutes we have spending with each other. We're going to be covering that stuff. So 17,000 crypto coins that's available right now. Not all exchanges offer them, right? But it's somewhat it's when people make those coins, it's there. It's so you can buy it some way somehow, right? So just to dive in a little bit, give more context to what a crypto coin is or cryptocurrency. There's a few different categories that these crypto coins or cryptocurrencies are based under. So let's start with a stable coin, right? And this is a definition I pulled off Investopedia. It's plain and simple. I like simple. Stablecoin is a class of cryptocurrencies in an attempt to offer price stability and are backed by a reserve asset. So let's talk about the stability part. On just the price of Bitcoin, it was at a high of 69,000, and then over the recent months it dipped to 32,000. And so that right there, as an investor or someone who's trying to grow their money, that's a big thing to consider, right? You got volatility to deal with, right? You got a 50% drawdown or drop in your portfolio. And so stablecoins are backed by reserve assets. So reserve asset meaning it's backed by the dollar, it's backed by a commodity, it's backed by real estate, it's backed by an asset. Asset.
Real world asset.
Real world asset. Tangible. It's not living in the blockchain space. It's
The metaverse.
or the metaverse. Yeah. So stablecoins have gained traction over time as they do. Oh, let me try to fix that. They offer the best of both worlds. They want the instant processing that blockchain offers and the security, right? And they want to be volatile free. And kind of comparing to like the dollar and the yen, the euro. So that's something that these coins or this category of coins aim to do, is they're trying to be the best of both worlds. Then we got, so to break it down even more, there's different types of stable coins. So we got the fiat collateralized stable coins. So these fiat collateralized, meaning the crypto, it's backed, paired with an actual currency, meaning it's if one tether equals X amount of US dollars, it's backed by the US dollar. And this other one, True USD, I've never heard of it. You heard of it, Reed?
No, I haven't. Only heard of Tether, and I didn't know it was actually like tethered to the fiat. That's pretty interesting. I thought it was its own coin.
Yeah. So the
Cool.
second category was a crypto collateralized stablecoin, so Ethereum, right? It's on its own, has its own network, has its own blockchains doing the thing. And then we have a non-collateralized stablecoin. So Basecoin, I've never heard of it. See, that's one of the 17,000 coins.
Yeah.
And then the addition of smart contracts. So we're seeing a growth of a lot of cryptos using smart contracts, right, in their network overall, not just with the dollar. I mean, with the cryptocurrency, there's businesses using smart contracts now, and then that's a NFTs is a big one, right? And so, kind of to just round it, right, to the industry is always revolving, right? We have new regulations. Oh, wait, I skipped one, huh? New blockchain technology. So, I think weeks ago, we were chatting about Stella, right?
Yep. And DAG.
DAG. It's a new thing. We got the blockchain, we got Ethereum, we got Tezos, we got DAG, Stella. So, new things
Different
are.
coins creating their own background infrastructure and
Mm-hmm.
back end network.
Then you got the new regulations dealing with these cryptocurrencies. So I think today I read on a news article that one of these big exchanges, Bitfinex, or I think
Yeah, I've heard of them.
they got compromised
Oh no.
by the big
Uh
government, bro.
US or like where were they
U.S.
based?
I think.
Wow.
So because so what that means is that private company Bitfinex, or I forget, um, they had X amount of crypto in their wallet, but whatever they were doing, they were operating illegally or whatever. They got busted, right? And so who takes over? Uncle Sam. The government takes over, holds their assets, because that's what they do with people, right? Um, Avoiding taxes, money laundering with business, drug dealers. If they get caught, they get a hold of all their assets. So you have the article. Did you find the article?
Yeah, dude, it's really fascinating. So this actually happened in 2016, but
Oh,
it's just released now. Like I guess they had a delayed release,
look at that.
but just recently released. Tied to the 2016 hack of the crypto exchange Bitfinex. Oh, they seized, I
They
think
seized it.
the original quantity.
Ooh, how much was that?
3.6 billion dollars worth. Wow. They were a Dutch couple. Very, all right. That about sums it up.
Look at that, man. And that leads to our third point of just being to know. You gotta stay updated. You gotta know what's going on in the crypto space because it's moving so fast. And us as investors, we just gotta stay updated, stay with the game, right? So jumping back to this whole idea of I got X amount of money, what do I invest it in? And then we want to talk about risk management. And that is the biggest thing with investing. That's the biggest thing with trading, day trading, whatever. Why is risk management important, Reed?
Management keeps you in the game longer. More opportunities present itself when you risk appropriately. You're not gonna blow your full account on two trades,
That's
on
right.
two positions.
That's right. So going back to the new Glenn investor, he downloads the latest crypto app, looks on the first three coins I see in the freaking screen. Boom, $1,000, $1,000, $1,000, and I hope for the best. All right, and so right there, I already exposed myself with in $3,000 of unnecessary risk Why? If I took more time to learn, if I took more time to create a process or a strategy, you know, then I can really make sense of why I'm putting the money there rather than just, oh, so and so told me. And so we don't want you with the examples where we're sharing, we don't want you guys to just directly copy what we're putting here. And so this is an example, right? So just think of your portfolio as just a whole entire entity of your assets, right? So we have 100% portfolio. Say we start with 10 grand. Say to split it up, they call it diversify. Well, we can do 25% in the stock market. So I can go buy some Apple, buy some Amazon, right? 25%. So that would be 2,500, right? If my math is correct.
Yep. Oh,
Okay.
250. No,
2,500 of 10,
500.
25,
2,500.
yeah, yeah, of 10,000. So 2,500 in stocks. Then I'll do 2,500 in crypto, meaning, so I can share on the next slide what that looks like. So with the crypto, it's like, okay, I'm just gonna risk my total risk for crypto is 25%. Then I'm gonna open up a forex account with forex.com or whoever, and I'm gonna go trade, day trade, swing trade, scalp with my 25%. And then you can also, if we didn't put it down on this example, but the rest of the 25, you can either go precious metals like gold, palladium, silver, or real estate. If you love real estate, you can do that as well. Yes, real estate does require a little bit more capital, but there are lots of different options if you want to invest in real estate, like REITs, REITES. You have syndications, you have different types, and that's a whole nother subject we can chat about. But you have those four allocations, 25% each, that equals to 100%. And from there, what you're doing with that setup is you're limiting your exposure in each market, because like one day stocks can be through the roof, and then on that same day crypto is taking a dump, and then forex is just going up and down, while you got a steady, just like steadiness from the precious metal space, you know. And so what you want to do, I don't want to like go into depth with the whole idea of it. It's, if you have stocks going up, you have crypto down, overall if you look at your portfolio, you want to see a more positive gain, right, than a big drop. If you went 100% in crypto and then it's a bad day for crypto, your portfolio's dunzo. Oh, look at that rhyming. But um, same for any other thing. Stock market, it has its moments. It goes volatile. Forex, same thing. So this is a way to just bring the correct perspective with risk management. Of course, there's more into that topic of risk management. It goes in deeper, right? This is just an overall broad view of how to adjust your risk with your current portfolio, of your current investments, right? Anything you want to add to that?
Oh yeah, you nailed it. Just proper allocation to your funds, because you don't want to lose everything in one. Put all your eggs in one Easter basket. As the saying goes, or a saying goes.
Yeah.
It's just smarter for your money. It's safer.
So let's break it down. Say we take that 2,500 at 25%, and then we can split it up into our crypto portfolio, right? And if you just want to go straight even, simple investing, this is what it could look like. You have 10 crypto pairs, or crypto coins, and then you can go ahead and just allocate it's simple math, guys. You take your 2,500 starting capital, and then you have 10 pairs, so you go 2,500 divided by 10. Boom. $250 in Bitcoin, $250 in Ethereum, Sheep, Solana, and all that, and going forward. And so the that's just a simple way to set it up. But there's it goes more. It doesn't just you don't just stop there and be like, tomorrow I'm gonna be rich, man.
Yeah.
You gotta set parameters in your approach on you knowing where to exit before you even enter, right? So if ADA drops 20% overnight or 40% overnight, what are you gonna do, right? Same for Bitcoin. It has dropped 50%. What you gonna do? But at the same time, if it does drop 50% and you're only allocating 25% of your total portfolio, the exposure is much less, compared to like my buddy who's 100% invested in Bitcoin. They gonna feel some pain. They gonna wake up Monday morning, but and then we're gonna wake up like, oh, I slept like a baby, man. I got a small drop. It's all good.
Yeah.
Amazon's pumping. That's gonna keep my winnings, but Bitcoin brought my crypto portfolio down. That's investing, guys.
Yeah. It happens
Yeah,
to
and
every
you
portfolio.
you can always switch it up, right? If you just want to focus on five coins, you can figure out, be like, okay, I'm just gonna focus on five, and I'll do 20% each. That's fine. Or if you really did your due diligence, you just love Sheep coin or whatever, you know. Um, we don't. It's hard to make a to be like so sold on one coin. If you're trying to approach it as a holistic way, it's hard to just be um, dedicated to that one coin.
Yeah.
So
It'd be a confirmation bias in a lot of the research,
yeah.
Like when you find the positive things it says about a coin and then you're like sold yourself on it.
Or I mean, if people have that crystal ball or they got that inside trading information, bro, we share it with us. No.
There is no crystal ball.
So I mean, that's what it looks like as far as
An
um,
example,
an
yeah.
example, and it's a good starting point maybe for those who don't even know how to put together a portfolio. They don't know how to start investing or really break it down. Use percentages. It's easier to use percentage than dollar figure. Of course, your percentage will represent your dollar figure, and that keeps you disciplined, right?
The unattached to money outcome.
Yeah, yeah. So I mean, like this kind of look what my portfolio looks like. I got a bunch of coins. I got a limited invested. Just let it roll, and I do have exits for. I did dump some crypto coins as they drop because I trade price action, and that's my deal.
The
I'm
nature
not
of the
gonna be.
beast. It's the nature of the beast, the market beast.
Yeah. So you got to keep risk management as a priority. You don't want to fall for the hype, right? You want to stay focused on a system, your trading system or your investing system, the way you make decisions. You gotta be consistent with it. You gotta be disciplined. Vitamin C, consistent. Vitamin D, discipline.
Yeah, I
If
like that.
taking notes, write that down. A good reminder for myself.
Say it again. That was a good one.
Vitamin C for consistency, and vitamin D for discipline. And not
Consistency and
even.
discipline.
Yes, sir. Yes, sir. So that would help you to not fall for the hype. Whatever social media marketing, people are pushing for the latest and greatest coin, pump and dump. Even dude, even celebrities are getting in on this, right? They're launching
Celebrities are
these.
not your friend.
Bro, are you telling me Paris Hilton? I can't trust her investing opinions. Just kidding. She's balling.
Oh, Feminine asks, how do we come up with a system? Where do we start?
Where did we start? Wow. Okay, how would you come with a system, Reed?
So when it comes to crypto or stocks, I look at an individual entity and like I do a little bit of research and try to convince myself almost through the confirmation bias that okay, this company seems legitimate. This coin seems legitimate. I'm going to just look at it. Just look at the price action, look at how the market moves, and then I would begin to start saying, okay, you know, start drawing lines in, start YouTubing some traders that you may find that fits your personality. And I think that's the hard part. So start setting parameters and rules on like, okay, when a price reaches a certain level, this is when I will enter the market. And you don't have to risk real money. You could just put lines to mark, okay, if I had this been a real trade, let's see if it worked out. And then you gather all that data one by one trade at a time, and then you see if you have an edge or not. So,
Right. No, that's good. That's good. I mean, just to riff off of that, find someone to model from, right? We got awesome people in this group. There's lots of resources nowadays. Um, and you can model the greats, model how the wealthy are doing it. And then try to break it down and try to figure out like, okay, why did that guy make that decision? Why did that person buy this? Why did they buy that? There's people who's just completely all in real estate. There's some people who's killing it in just stocks and forex or futures. There's people who's just doing awesome in crypto. And there's those ones you gotta really look beyond, like through the veil, and you're gonna see who's like an actual. There's different types of investors. Like you can see the authenticity, the genuine, how if they're genuine, like not just, oh, I got lucky, I bought this coin and went up, and then they sold it. Hey, it's fine, right? You want to look for people with track records. You want to look for people who are just really, they're transparent with what they've done to be successful and how they're learning. So it all depends. Like we have trading systems you can research on. You have investing systems. Their whole idea of like I guess the biggest thing I would focus on, like how do people make these decisions with their money, right? And it goes
yeah,
back to
and like Google what their system is, like what trading style does Warren Buffett have, or something like that
oh,
along those
yeah.
lines.
Yeah, and what questions are they asking? What are they looking at? Well, how do they get their information? Information is key. There's a lot of fake information out there. Just because
Yeah.
the person has 100,000 followers and he puts out crap content doesn't mean it's always good for you, good for your wallet, right?
Yeah.
And what Reed was saying, you got to put in some work. You got to do the research. You got to um, just spend the time. And that was what my last point was. You can't get lazy with investing. You got to be ahead of the game. You got to have an edge of over your competitors. I heard this one saying. Someone said, in order to be an expert in a field, all you gotta do is be one chapter ahead of everyone else. You know,
Bam.
damn, dang
Okay.
boy. So a lot of it, it's going back to, okay, where do you want to go? You
Okay,
gotta put in
I
the
have a
time.
question. How do you stay ahead though? Is it through based solely off of news, research? Like what would you recommend to be able to stay ahead of it? And what does that even look like?
That's a damn good question, bro. Put me on the spot now.
My
um,
bad.
It's
Let's think it through.
yeah, let's think it through, right? What you said, just sticking to the news. You know, if that's your number one source, it can't be. Some people swear by it, but they get different types of news. It ain't the usual KHON Hawaii News Now news, right? They have the different Bloomberg or finance news up that displays just different news. And I think there's news channels, audio news channels that they decipher. I forget what the service was, but like they filter out so much data, so like tweets, news, press releases, and they put it into this one channel. And this is what traders use, some day traders. I think John Nettle, he was using this, and it just he gets it, and then he has a system or a computer that deciphers the information for him and helps him make trading decisions. So that's one system that he has going for him.
He's
But
using artificial intelligence.
yeah, using that. So he's staying ahead of his game by utilizing that tool, right? He created a program, he's using it to his advantage, and that's how he's able to be profitable. But staying ahead of the game, you know,
How
sometimes
does that look like for you, Glenn? How does that look like for us? I would say price action.
price action.
Price
Yeah.
action helps us stay ahead of it. Identifying price action that we're very familiar with, you know, that raw price action, that raw chart analysis.
That, right? Yeah. Plus your mindset,
Absolutely, yeah.
having a strong discipline mindset, and that develops over time.
It comes to it. Remember, 3 pillars. It's risk management,
Yeah.
mindset, and we're talking about risk management, kind of talking about mindset, and then your system comes last. So, yeah, we want to make sure that you start off on the right foot with investing. Otherwise, that's how you lose a lot of money, and a lot more frustrations will come along the way.
Time and money.
First two.
Yes.
Yeah,
And
time and money.
that's what I've lost a bunch when I started out. You know, there are
Same
people
here.
and so that's experience too, and that helps you develop a system. You have to go through this. You have to fail forward, as they say. And I hope that answered the question.
That did, dude. Awesome.
Sheesh. Drifting off too
Good
much.
stuff there. Good stuff. Good content.
But as far
Hopefully that
as
made sense,
I
Feminine.
know,
Yeah.
there's a lot. There's a
Like
lot.
I guess like the basic answer is like before we think system, let's acknowledge and understand risk management before we build that system. Build a system around your risk
The
management.
3 pillars, man, as you
Yeah.
mentioned: risk management, mindset, psychology, and strategy.
Yep.
And understanding those concepts, I would even just start there. Understand those 3 concepts.
And they merge together to form consistency, profitability.
Yeah, that's how you make a tons of money, yo.
Tons of money.
Tons
Make
of
a
money.
plenty.
Yeah, yeah,
Cool.
yeah.
Great question.
That was a good one. But yeah, as far as
Femlin asked the 3 pillars. So the 3 pillars that we really like to preach almost is risk management. Yeah, Glenn will be typing it. Risk management, mindset, or psychology of trading, and then the last part is the strategy or your edge.
yeah, like for example, the strategy, right? Let's just give an example. If I let me see what's a good strategy for like flipping a coin. If I add a little, so we got heads and tails. If I just like added a little bit, taped a little bit of weight on the tail side, what, and you knowing that gravity is gravity, flip it, wouldn't the heavy side land face down all the time, right? Just theory.
More often than not, yeah. In
Right.
theory, more often than not, yeah.
So with that, you have a slight edge, knowing that you're always gonna pick heads. you know. But that's kind of, so that's an example. Like, there's a proven edge. More, you're using probability there, and making your decisions based on, yes, you know what, 7 out of 10 times, I know I will be right. Vice versa, right?
70% strike rate.
Mm-hmm. And then you got psychology, mindset, big thing here. This bugger. Tell you all types of fake stories.
Yep. Learn a lot about yourself with trading.
It goes from maturing as an investor, understanding the lingo of trading or investing, really learn all the things we don't learn in school, right? Why
Yeah,
do
they don't teach
why,
it.
why do wealthy people always get richer? Like, I think they did a release recently. Since the start of the pandemic, billionaires have almost like doubled their fortune,
Yeah.
right? And so that's kind of like touching that area of like, how do wealthy people do? Why do wealthy people do the things they do? Why do they make the decisions they make? Why? How can you buy a $50 million jet and write it off on your taxes? Because you
You
can, damn
can.
it.
You can.
You can. Or for
Gotta learn the process.
like the Mercedes G wagons, right? I realize why a lot of people buy it is for a tax write off because it's over 5,000 pounds gross weight, and that
Ah,
is big. If you knew the tax code, I think in 2019 they made it where if your vehicle is over X amount of weight, you can write off, was it like 60% the first year, and it'll trickle down the following years as you have that car.
wow, that's awesome.
So
And
all
it
those, all
draws the
those
eyes too, That's good.
the big SUVs, the
Good
trucks, or
marketing.
whatever. Yeah, yeah, yeah. So that ties up with psychology and mindset, or even like going back to psychology, like, oh, why did I make that decision? Why did I
Yeah.
make that stupid trade? Right? That whole process.
What's the underlying meaning of me placing this trade when I knew it wasn't gonna work out?
Yeah. Why do I keep losing money, Reed?
And we can't answer that for you. Some of those questions you need to come to your own realization through journaling.
Yeah, and
That helps.
we'd be happy to guide you on the right path.
Yeah.
But
We'll show ours. Well, that'll be a discussion
yeah.
on how it looks for us. Yeah.
Mm-hmm. Mm-hmm. Any risk management, kind of what we touched on now, keeping your risk in check. Um, you know, I thought when people would trade big accounts, that meant they were, say you had $100,000 account. I thought they were always risking $100,000
So
when
you
it
need to
comes.
be a little more educated. This is when you're a new trader.
Yeah, when I was a new trader.
Yeah.
Yeah, I understand risk management. I was like, what do you
Yeah.
mean, dude? Like,
I think risk management is like the last thing most people will look at. I
because it's
know that was
boring.
mine. Yeah, it's boring. It's like, who cares? I just want to make money. That which is a total immature mindset coming into the market. That's why you lose so much. That's why
Yeah,
I lost so much.
same. I was like, you mean I can't buy a Lamborghini tomorrow? Good questions, man. But yeah, I mean, yeah, if you guys have any more questions, we're gonna wind down the conversation. We're coming up on the last few minutes here, and I think tonight's topic was a really good one as far as exposing that different side of investing. How much can you be exposed to? Um, you have to, another thing with psychology and mindset, like your relationship with money. That's a big one.
Yep.
And that's a big one I had to work on personally by learning new information that I can't learn from my parents. I can't learn from my friends. I can't learn from school, right? They teach you a certain thing, and so I learned that through mentors, through getting courses, getting educated. So by understanding,
That's the way you invested in your mindset, is
oh
buying
yeah,
those courses. Yeah. So it
so
correlated to trading. Yeah.
books, podcasts, videos, training, going to live events. It's
And
a
would you say it's all you did all that because of trading, or like trading helped guide you that way, or were you always kind of going that way and then you discovered trading? Like, how did it work for you?
It was funny. Trading actually was the initial like snowball.
Yeah.
It
Same
was
here,
like,
man. Yeah. I started reading because of trading. I'm like, you know what? I want to know more. Like,
give me more. I
yeah.
was like, dude, the last time I opened up a book, I was like in high school.
Yeah. And how many years was it after?
I would say 8 years, 7 years
Wow.
after. I mean, aside from college, and you had to do. I had to do that stuff, but
Yeah.
actually intentionally approaching a book, a big freaking thick book, I'd never been so excited before.
Yeah. What was it? Market Wizards?
It was that. It was that. I got the trend following. It was yeah, some other bunch of ones.
Awesome.
Dense books, man. They're dense.
Oh yeah, they are. But like
Mm.
they're so fascinating in a very boring way. If you like explain it to other people. Um,
But
But
yeah, I mean
you
that.
don't have
Oh,
to read those books, right? I mean, I think it helps. Yeah,
I would
helps, but
I'm putting
yeah,
it
I
in
definitely would
Snapchat.
too. But I mean, there's videos if you don't like reading books, there's YouTube videos, a lot of types of videos out there. Interviews. I think interviews is a good way to learn as well, as far as psychology goes.
Kind of part of it too is understanding what works for you, what's
Yeah,
more
there you
effective
go.
in
I
learning.
think
Yeah,
that's the bottom line.
you start learning on like some people hate reading. I get it. Audiobooks. I think you prefer audiobooks than actual reading, right?
I do. Yeah, yeah. Audiobooks is awesome, but I'll read too. I have a couple of books around. I always have around just in case I want to pick up something physical.
Mm.
Some Fiat.
So yeah, that's true. That's true. And even conversations with people. That's a big one. I realized later, having the right conversations with the right people, next level.
Elevates, yeah,
Mhm.
elevates you. Right, exactly.
Being in
Your
this
circle,
conversation,
right? You begin to refocus your energies to important things in life. Yeah, networking, exactly.
start firing your friends, yo.
Yeah, yeah.
Unfortunately, but it happens, I love everybody. I love everybody.
Oh
If
yeah,
my
absolutely.
old friends need help, man, I'll offer some to a certain degree. But I'm like, I have a confession. I'm greedy with my time. Most of the times nowadays, I'm greedy with my time because you can never get it back. You can lose money,
It's
but
precious. It's
time is
precious.
precious.
Yeah.
It's one of the biggest assets. And when you start realizing that whole mindset, that shift, that's why you realize why rich people buy jets, why they have all these people working under them. They're multiplying
They
their
enjoy
time.
it, right? They enjoy their time too. They know how to
Absolutely.
enjoy
Mm-hmm.
the time that they've
Mm-hmm.
worked so hard for.
Bang. Yes.
You
Yes.
know.
Good stuff, man. Good stuff. But yeah, that concludes for tonight's Trading Topic Tuesday with crypto and risk management. I hope that we shed some light tonight on those topics and hopefully start turning some gears, right? And get curious about these topics, ask questions. You guys know where to reach us. Um, but yeah, definitely if you guys need help, reach out, reach out.
But yeah, next week we um
What we got next week, bro?
anyway. Yeah, next week we got strategies and trading crypto. So that's probably part of the system that we were talking about.
Boom.
You can learn strategies. Yeah.
Bro, you mean my
It's
strategy of buy and hold and cross my fingers isn't a legit strategy, bro?
it could be. Depends when you bought it. Long
Oh,
as
there
you're
you
journal.
go. Depends where you buy it. Yeah.
Yeah, yeah.
Cool. So same time next week,
Same
same
time next
same
week.
place. Cryptos and
All right.
strategies, guys.
Sweet. Thanks for tuning in all. Good.